So welcome back, and let's talk about moving averages. You will find two videos for now here in the moving average module for two basic moving average strategies who work quite well and who can be adjusted accordingly. One is more of a longer term, more like a swing method, but you can use it on all the time frames. It just means that it filters out more noise because it uses wider parameters, whereas the next video and the next lesson we will take a look at a faster reacting moving average strategy. So in this video we will talk about a moving average crossover system which uses the 50 and a 200 period moving average. How do we set that up? We go to indicators, so first to insert indicators, moving averages, then you can see we have period of 200, shift we can let it at the default 0. Method here, there are a few options. I like to keep it on the default, just stick with simple and apply to typical price, which is quite nice. You can use high-low divided or high-low close divided by 3, high-low divided by 2, both work well. I like to use the typical price. So we have a first, and here you can adjust the thickness of the line. I like to use a little bit thicker lines. Then we add our second moving average. We do the same again, insert indicators moving average. Then here we enter now 50. We can apply the same. Maybe you can change the color so that, or we can even leave it to red. And now we have a second red line. So two moving averages. If you hover over, you can see that now there's the value 250. The 50 moving averages uses or analyzes the past 50 price candles and then gives you the average price over the last 50. Whereas the 200, as the name suggests, it analyzes the past 200 candles, then gives you an average. The 50 period moving average moves faster. So you can see the one that here rises quicker and here falls sooner when the price falls as well. That is the 50 period moving averages. There are different indicator combinations that you can use. There are many different ones. If you want to use a shorter and more fast reacting, maybe try to use the 9 period and the 50 period. It's a very common one as well. It depends on the preferences, but for this moving average crossover and pullback strategy, this period works quite well. In the next video we will take a look at a shorter duration system. You can also, which is quite handy here in MetaTrader, when you right click on your chart, you can go to template, then you can save the template, and here you can then give it a name, for example MA 250, and you save it. And now when you go to a new chart, you can just right click again, go to templates, and when I move it a little bit higher, then you will actually see it. Here is then the setting MA 250, and then you can set up your charts quite easily. So how do we actually find trades with this trading strategy? The idea of a moving average crossover is that you, as the name suggests, you look for a crossover. For example, let's look at this and let's see what happens here. So the price here at this point, the 200 period moving average was well above the 50 period moving average, but something here is changing because suddenly the moving average goes from moving downwards. First it drops off a little bit, and then here it starts to rise significantly. It suggests that the short-term prices here, they are changing the way they are moving, even though until such a point where the past 50 period, the past 50 price candles and the short-term price is actually starting to rise. So it means that here we were in a little downtrend. This downtrend then here clearly dropped off. You can see that we barely make a new low, and then here suddenly the price starts to rise. We make higher highs and higher lows until the point here where the short-term period moving average crosses above the long-term. This is a very important signal because it signals that, as we can see from the price action, that the trend direction and the momentum situation is changing here a little bit. The short-term prices rise above the long-term prices. This is a very important point because it shows a shift in the trend sentiment and the momentum, how the momentum plays out. And how do you find now trades? The first important point is that you want to see that the price is making a new high or giving you a breakout. So what I like to do is that I look for where was the last swing high, where was the previous high behind or before the moving average crossed. Those were clearly here in this range. Then I wait for price to break it. So there are two ways how you can enter such a trade with this method. The first one is that you trade the actual breakout, which would have happened here. So you see that price is breaking here above the previous highs. We move higher a little bit, pull back into this area, test it as support. Interestingly, we move both back into the previous resistance, which is now turning support. So this is a break and a retest pattern, very common. And we also come close to the moving average. So a pullback to the moving average can also often be used as an entry strategy and as an entry signal. So depending on how you feel, or even if you want to trade both, that is totally fine. You can maybe split your position, get in first with a smaller position, half a position, or anything that you feel comfortable with when the market is breaking it. And as long as the price is not violating the moving averages, you should not get out of your trade. So the idea and the general idea in such a case is also that you put your stop loss behind this breakout zone. So in this case, you look at the highs and the lows. So here is obviously the breakout zone. Then your stop loss would go here below this zone ideally. So it is a little bit protected from sudden price movements. And then you can see the moving average acts as support, the previous resistance, which is now support, is holding, and then you wait for price to continue its direction. It is continuing the direction here when the price moves higher. So you can get another entry here once the price pulls away from this area, and it shows that, okay, the moving average held, the previous support and resistance held, so this is confirming the trend. Or you can also choose, if you are a little bit more conservative, you wait here for price to break out of the above the previous high as a confirmation, and then you can see here would then be the second entry. So there are different ways of entering such a trade. I don't want to give just one predefined rule, because many traders, they look at the market differently, they view and have a different understanding or preferences. So I want to expose you to different ways how to enter such a market. Let's quickly recap. The first signal would have been here after the breakout of the previous highs, after the moving average crossed. Then the next would have been either here when the pullback held at the previous support and resistance area, and also at the moving average here. Or the third one would have been here once we continue the trend to the upside and make our way higher. How do you exit such a trade? There are two ways how you can exit such a trade. First, you wait until the price dips back into the moving averages here, which can often give you a little bit of a false signals, because not always will here an exit in the when it's so close, especially to the moving averages, cause a trade or trend reversal, especially if you see that the lows are still holding. So in this case, here was the last swing low. The price is moving back into the swing low. It's just retesting it. So you might want to consider staying in the trade. Whereas then here we can see here was then the last swing low and high. This level is still holding, although you can see here a lot of volatility. But where do you see the actual change, where the highs and the lows are changed? That's here. So here would then be another exit option. And again, it depends on your preferences. Do you like to get in and out of trade quickly, then get out on the first dip back into the moving averages, or do you like to wait a little bit longer, then look for a change in how the highs and the lows are forming? So we can just follow this maybe and see what happens. I think it's a nice exercise. Here's then the next cross. Let's just observe that. And where was the last high or the last swing low here previously? Let me zoom out a bit. So here we left off here. Here was then probably the last swing low that you want to consider, a very strong reaction here, and the price never really broke below this low. The short-term moving average crossed here below the long-term moving average, so this is where you start looking for shorts. but at the same time, there was never really a signal where the price broke into a new low, so no short was triggered. Then let's follow the price. Here is then the next signal where the market or the short-term period average crosses back over the long-term period average, and that's where you start looking for longs. The last swing high here was here in this case, so you wait until the price breaks out, and you can see in this case we catch a nice trend move. The price breaks out here above the previous highs. We can initiate a long. The price, the stop loss again would go here underneath the price, underneath this zone here, to protect the price a little bit. And you can see that this moving average here acted as support here a little bit, kept the price from moving lower. Then especially interesting is, this is a little bit of a tough call, but would you get out here of your long position? It's a tough call. You see that, okay, the price was moving down here quite significantly, but it never really broke below this area here. And you can see that the market would have continued and continued up until the point where here's actually where we break below the last swing low into the moving average, and that's then a real exit signal. Then we can just follow in such a case where we are inside the moving averages. We are not going to do anything. We are waiting here for our next signal. When the moving averages cross, this would have been here. And now is the question, where do you get in? Here is now the short-term moving average is crossing above the long-term moving average. So here is now the short-term moving average is crossing below the long-term moving average. So here we would start looking for a short idea, but here nothing happened. Where's the last swing low? Here's probably where you would draw your support level. Lots of support here in this area. Then here we break it. This is a tough call. Do you get in here when the level is breaking? It's quite close to this one, but you get another chance, which is probably nicer. You see that this is a very common pattern. I've showed it to you quite often. We break below this area. If you are not comfortable with taking a short here, you see that the market is coming back into this area, coming back immediately, retesting it with a strong rejection candle, and then we fall lower. So you can see here would have then another short entry after we break those lows. And again, this candle leaves a long wick. As I said in the hanging man, most traders will be scared of this pattern, but we know now that this is not necessarily a sign that the market is ready to reverse unless the market actually reverses. So we need to wait out what happens. And since the bias is here short, we stay below the low here. It is retested here, and then I would even suggest this is here an entry, because we have momentum on our side. The candle is breaking. We have the long wick into our direction, and then you can see here we are dropping off, and then the price dips back into the moving average here. At this point, we're breaking above our high, and then we exit the trade. A nice filter is the moving average crossover is a nice filter together with the highs and lows. It's very, very powerful. So you can stay away from a lot of noise. Here the moving average crosses again. We have our high here. You can see how nicely it is being respected. The breakout happens here. Again, what is happening before the breakout? We have a low, we have a low, a higher low, and we have another higher low. So the market is already trying to push into it. Then we have the breakout here, clear breakout, very nice signal. The market moves higher up until this point where we break back into the moving averages and make also a new low, because you can see here is where the price is breaking back into the below the lows. So the pullback system and the breakout system is very important. It is very important that you always not look just for a crossover, because a cross is not important enough and not meaningful enough. You need to wait until price is also breaking the last support and resistance area to get into nice trades. We can just follow this, and you can see how this plays out. So here is the break. We can see here the short-term moving average is now below the long-term moving average. Here was when they crossed. Here was the last swing low. You see here or here it was broken, and then what happens? Boom, we drop lower. Here we close back into the moving average, and the trade signal is over. So you can see that it also helps us a lot during noisy periods. Here was another break above that. So This is a little bit of a tough call. Here was the break, but how do you trade such a market where it is so erratic? I don't like to trade such markets because, let me draw that back in. The more erratic such a market is, you can see that ding, ding, ding. It's just bouncing back and forth. Here we do have a lot of resistance in this area, very strong level. So this is a good way of how we put it all together. You want to be a little bit selective. If you are trading in such a range market, moving averages are not your best bet. Wait until the situation clears up. You can see that we really have a bad market condition here. This is also to the bottom. It's continuing. We have the moving averages just hovering over each other. That's not a good signal. We want to see that the moving averages are a little separating, that the price action is not just up and down, but we are actually seeing nice swings, clear swings like we did here, clear patterns with clear breakouts. That's what we will learn later as well. There's a lesson coming up which is called market selection, clean versus messy charts. You will learn that later then. So I think that's a very, very good introduction into moving averages, systems, crossovers. Start with a 50 and a 20 period combination. This is a good start. It's a very reliable system. Make sure that you understand that it's not only about the crossover, but you need to put the market context into perspective. Look at breakouts. Where's the last swing, high and low barrier? How do the swings move? Do you have nice swings? Look for clean breaks of previous highs and lows, and then write those trades until you see a signal given that suggests that something is changing in the market direction. And then you can already catch nice trades. In the next video, we will look at a shorter and more active trading strategy based on moving averages.